So you get those prices sky high. It's going to stagnate and stall the economy. Ethanol guys are going to overflow, and that's going to be, could be negative initially. So that's why I didn't give it a very, very bullish scenario there. Global debt, -3. I'm not sure about this global debt thing. Like I said, I think we're trading on a new dynamic. You can continue to say that we're trading, who the hell doesn't know that global debt's off the charts? So what? I mean, I don't think anyone's trading on that dynamic. They're not on that plane anymore. Everyone's like, okay, we've assessed that, we know that, we're going to trade up here now. We're going to trade, and that's really probably just going to be an afterthought. And if it does unspiral, now it will create some ripples. That's why I said I think you got to give it a -3. I think you got to play it in a, it's on a weak side type of look, and I think it's fighting against us. So you add all of them up. I come to a +1 as I do it, and I average it all out in my head and run the numbers, and I'll be at like a +1 on that equation. So that gives you guys an inside look. I mean, identify as you break the huddle in the mornings, or if you break the huddle every week, identify the players in the game. What is moving these markets? Is it the headlines? Is it this? Is it supply demand? Supply demand could all of a sudden move back and become safety. I'm not saying it can't. But right now, I don't see that being the case. I think it's moved positions. So I've, weakened the tone of that to a degree. So that's how I'll come up with bearish or bullish. Like I said, I thought safety moved to a degree when Europe started to really unravel and all the fund money started pushing into the dollar. We kind of thought that was going to be the play. The dollar started jumping higher. That's why we were on the bearish side of the fence. Once that storm blew over and everyone bailed out of the root cellar, hell, we were back to the bullish side. So understand the game and understand the politics and understand the players. I had a lot of questions as of late when I went out about livestock. I am certainly not a livestock expert by any means. I get a lot of great information from the guys on the round table and on my board of directors and things of that nature. My obvious thought on livestock, I'm bullish. I'm bullish livestock, period. I read a thing that said I could throw out the numbers on the cattle herd, but who cares? I thought this was better. It said the U.S. cattle herd to date, right now, is at the same place it was when McDonald's had 75 locations. That's it. When McDonald's had 75 locations, we had the same cattle herd we have right now. So that's pretty crazy. I mean, the cattle herd is down, to say the least. Pasture land, we were up in the Dakotas and everywhere. Pasture land's being torn up right and left. I think a lot of crops are going in to a degree. But I am definitely, I'm bullish cattle, and that's why I said I kicked myself in the ass when I went and shorted the cattle market. I mean, it's just one of them dumb moves. Broke the huddle, read it right, threw a pick, walked to the sideline, just shaking my head, a little lighter in the wallet, I should say. So I try not to go against myself, but I just get like, oh man, I really think this is the top. What the hell do I know? How are you gonna pick a top? You look at a chart, it's like straight up, and I'm like, oh yeah, I'm gonna pick it right. I'm that good, I'm gonna pick that top right there. So it's silly, and that's what I wanna teach you guys and try and help you understand is that don't go against yourself. Trust your instincts, trust your reads, trust your calculations, and trust what you've come up with and take it from there. I think there's obviously a lot of fresh water is going to be an issue. I think that's going to cause the herd to have some issues and problems. And I think we do have strong global demand. Understand this, if that thing in Europe unwinds, if we unwind in Europe, global debt becomes an issue, it rolls over, China goes in the tank, we get into some type of recession. My opinion, the first one they cut back on is cattle. Obviously, because the thought is that higher protein diet is going to start at the top of the food chain and just dink down. So cattle is going to be liquidated first, probably because you're going to see less beef being bought, or import demand will go down, so to speak. So understand the cattle guys in the room. Obviously, you're having your day in the sun today. Make plans. Make sure you understand that it could crack in a hurry if they get skittish on some type of recession into the Asian area or some type of recession in those fronts. I am extremely bullish, though, the bigger the herd gets in Asia as far as hogs, or the bigger the herd gets in those countries, with disease becoming a bigger factor because it spreads like wildfire over in those areas and creates a massive run into the market. Once again, a good story, funds love it, and all of a sudden we're off to the races. So there are some equilibriums there that we need to watch as we move forward in the livestock. Next one, I won't even put the slide up yet. How many of you think farmland prices are in a bubble? Anyone? Raise your hand now, come on. Oh, come on, you liars. You call in all the time asking me, oh, you think prices are too high? This stuff's gonna bust. I mean, I hear it all the time when we go out. I don't think so. I'm crazy maybe, I don't know. I don't think so. And the reason I say that is because of this. I think everything has value. I just came up with this when I came back from Arizona. I was listening to some people, and I just kind of started thinking, I'm like, because I thought land price is kind of similar to home price. I'm like, here we go, land price is racing up farmland, and we're going to crack, boom. I don't see it. The reason home price is cracked, I mean, everyone knows, you know, hell, we just rolled the dot-com bubble into the housing bubble, and the housing prices for years tracked with wages, right? When we got into the bubble is when we decided to divert from the wages. Wages started to go here, we lost unemployment, all of a sudden home prices went up, bubble. I don't see it with farmland, and here's why I say that. If I go back to this thing that price doesn't mean shit, it's value, follow me on this. 1980, average yield 91 bushels an acre. Price 310. Just multiply them times each other. I just come up with my own index. I just said, hell, this is whatever. We call it land production. I don't know, maybe there is an index. I have no idea what it was. 282.1. 1990, average yield 118. Price corn, 245. Creep a little higher. See if I can get this down right. Right here, 2000. 137 yield, 249. Here's the price of land. 2005, 145 yield, 236. Here's your jump. 153 yield, 540. The price of farmland, in my head, the equation is the number of bushels times the price. That's your value. That's the value of the ground. If you go out and continue to equate, 09, we go 162 by 390, we drop to an index of 615. Here we go, 165 yield, 450. We're at 742. Here we go, 2011, 147 yield, 650. 2012, let's say we go 162 yield. $6 corn, you're still going higher, 972. Let's say you go $5 corn. You didn't drop much. You didn't drop much. You're at 810. Go out to 2030. I told you the seed companies want to be at 300 yield. They don't think it's out of the realm at all. You go 300 yield, and you go $6. I don't think land prices are coming down. You're at 1,800. You're exploding. You're doubling. Understand, production is key here. 300 yield. Let's say you go 300 yield at $4 corn. Holy shit, we're at $4 corn. The index I come up with, you're at 1,200. That's not down. That's not lower. Okay, so what? Corn's going to go to 250, 350? You're still not getting banged up too bad. You're still in this area right here. So understand, there has to be a divergence take place. I mean, yield would have to stay down here. Yeah, well, it's yield going to stay at 162, and then you're going to project out? Well, possibly then, yes. I don't say that happens. That's why I just don't see that. I'll tell you another thing about land, in my opinion. This is just my own personal opinion. I think you should be buying all the dry land you can buy. I think genetics are all the world, and all the money is pouring into dry land. Emily pointed it out. You got China trying to feed 20% of the world's population on 5% of available water. Bill Gates is throwing all his money into finding traits in genetics for people without water. I don't know, what looks like a bargain to me is to buy dry land, buy ground, more dry land out towards Kansas area. It looks to be cheaper to me if genetics gets it right. If the traits in genetics get it right, it looks to be more value to me out into the drier land areas. I mean, that's just in my opinion. You Kansas guys can tip me after all this is over. Get that, get my bone. I'm kidding you on that in a sense that I think genetics is going to play a big part in this, and the world seems to be focused on genetics for drier conditions. In those drier conditions, there may be an advantage to, you know, I'll just tell you right now, and then maybe this guy's nuts, maybe, and I had a guy from Nebraska too, said they were selling their ground in Nebraska and going to buy ground out in Kansas, in western Kansas, the cheaper, drier land. Some farmers said, like, what the hell, is the guy nuts? I don't know. Maybe he's nuts, maybe he isn't nuts. Maybe he's onto something. I'm not sure. But it's intriguing to play out and think about. Maybe that dry land ground will produce big numbers at one point. I'm not saying they're going to produce Iowa, Illinois numbers or things of that nature, but maybe value-wise, remember value, number of bushels times price is what your value is on your land. So understand that moving forward. Don't be so quick to think all of a sudden we're in a bubble and this thing's going to bust. I'm not sure how that plays out moving forward. Next thing, I believe is your marketing plan needs more flexibility. I'll go into this real briefly and quickly with you guys. When I first started trading in Chicago, I'd come back home. There'd be guys that playing dominoes and things, some of the farmers locally, and they asked me a bunch of questions about the markets, what was going on, this and that. I just flat out finally told them they didn't need to be trading anymore. I mean, they'd get frustrated. They'd get with marketing advisors that I would say led them down a path that they didn't need to be down. Most of them lost. Let's just be realistic. Most of the marketing advisors come up, in my opinion, with a cookie cutter plan or a program for their best farmer. They build that plan for that farmer and then try and sell it to you. And unfortunately, we're not all the same. Some of us has wives that may be sick. Some of us has daughters that are getting married, kids in college. We need different cash sales. I think Andy alluded to the fact every operation's different. Every farming operation's different. So if you get involved with a cookie cutter type program, I'd probably say get uninvolved. I've just heard too many guys call me and ask me, well, my marketing advisor got me into this position, and then when all shit hit the fan, he called me and said, well, Bob, what do you want to do with this thing? Well, hell, he got you down that road. He took you into the woods. I would hope he's got a path or an exit strategy to get out of the woods. So if you're getting those calls, I don't know. I mean, you might want to rethink some things because that's not where you need to be in these extreme waters.